If your goal is to improve your financial future, then understanding your credit score is a pretty important part of that. In this video, I'm going to explain how credit scores work and answer some questions like, why do I have multiple different credit scores? My name is Jordan. I'm a licensed mortgage advisor. Let's get into it. So first, why are credit scores even used? And is it important to have a good credit score? One of the main things that I want you to understand from the beginning is that having a credit score and having a good one are really only important when you plan on borrowing money or taking on more debt. This credit score is a reflection of if you've had debts in the past and if you've been good at paying them back. So lenders use a credit score as a tool to see how risky it is to lend you money. And they assess that risk by seeing your other debt payments in the past. With this credit score, they also can determine things like, do you qualify for a certain loan? Do you have to have a certain interest rate to do it or a certain down payment percentage? When it comes to credit scores, my next video is going to be how to improve your credit score. So if you haven't already, I'd love for you to subscribe and stick around to watch that one. But for right now, this is what affects your credit score. So first, the biggest thing is making your payments on time. That affects 35% of your credit score. The next biggest is your total amount of debt across different accounts. That makes up for 30%. The next one is your length of credit history. This makes up about 15% of your credit score. And there's no magic number for how long you have to have a credit history for it to be considered good or not. But lenders will see it as less risky if you've been having credit and making payments on time for 10 years rather than just opening up a credit card in that last month or two. The next one is any new credit requests. So, did you just take out a credit card last week and now you're applying for a personal loan? That would be a little bit more risky for a lender to take on. And then the last one is your mix of different credit accounts. This one, again, is just 10%, but are you just having credit cards or do you have student loans and personal loans? And are those things spread out or not? With credit scores, these scores usually range from 300 to 850. Anything above 800 is considered excellent credit. Your good and very good credit usually ranges from 660 to that 800 number. A fair credit score is somewhere between 580 and 660, and anything below 580 is considered poor credit. So, who collects all of this information? That's actually these credit bureaus or credit reporting agencies. You might have heard of them. The three main ones are TransUnion, Equifax, and Experian. And what they do is exactly that. They collect the information about how many different debts do you have? Are you making your payments on time? When was the last time you opened a new account? Have you closed any accounts? So that's what their job is. They collect all this information and they store it and they keep it together for when you're asking for a credit report or a credit score. This information is usually given voluntarily by the lenders. So, say you just opened up a personal loan, that company that you got the loan from is going to report to these companies and they're going to say, hey, this person just opened up a new personal loan. They're making their payments on time and they're in good standing with us. And now this gets into the question, why do I have different credit scores? So, something to get off the bat is you have a lot of different credit scores and they can be different depending on which one you're looking at. So the two main different scoring models are FICO scores and Vantage scores. Vantage scores are the ones that you see on Credit Karma and maybe some other similar companies. They're not usually the ones that are being used for lending decisions. So they have different scores within Vantage scores. You can see the 3, the 4, the 4 plus, and the 5. Each of those could be a little bit different as well. And those are Vantage scores. They're good ones to track of whether your score is going up or down. But again, they're not going to be the ones that lenders are using to see if you qualify for a certain loan. The ones that lenders use are these FICO scores. And there's a few different FICO scores as well. I have them listed out, essentially 2 through 10. And FICO 8 scores are the most common ones. Even within these different numbers, there's specific ones depending on the loan that you're getting. So if you're getting a car loan, you might see your Experian FICO 8 auto score. And that's the one that the car lender is going to be using. For mortgages, we use the Experian 2, the Equifax 5, and the TransUnion 4 score. When we do a credit pull for you, we get those 3 scores, and the credit score being used is going to be the middle score of those 3. With all this different information about credit scores, here's what I think you should remember. First, again, there's multiple different credit scores that you have. These scores can be different depending on where you check or which lender you're working with and which score those lenders use. You can check these scores by going on places like Credit Karma for Vantage scores. If you're looking for your FICO scores, I prefer myfico.com. They have a free place to check one of your FICO scores. With having different credit scores, it's important to know that instead of saying my credit score is this, you can say things like my Experian 8 FICO score was this. And that's a more accurate representation of where your credit is. With these tools, MyFICO and Credit Karma, both of them will have different insights to your credit score. They'll lay out those percentages that we talked about earlier, your on-time payments, total amount of credit, your hard inquiries, those kind of things. And they'll say, this is helping your credit, but this here is hurting your credit. And that gives you a good place to check where you can improve your credit scores. Like I said earlier, the next video after this is going to be about how to improve your credit scores. I hope you stick around, subscribe, and watch the next one.